Welcome all who are going to be in person here, in person virtually, and watching the recording afterwards. We're very happy to be joined by Bob Bobek, CPA of insurance partner with Gilmore Jasion Mahler Limited, and they'll be here today to talk to us about manufacturers and pandemic relief, kind of an update. So Bob has been a partner in the audit and accounting department for over 30 years of public accounting experience and leads their construction specialist team. Bob has experience in working with clients in a variety of industries, including construction, real estate, service, distribution, manufacturing, and nonprofit. Bob is a graduate of Bowling Green State University with a bachelor's degree in business administration and completed postgraduate studies, obtaining the degree of Master in Business Administration, specializing in finance from the University of Toledo. He is a member of the American Institute of Certified Public Accountants, Institute of Management Accountants, and the Ohio Society of Certified Public Accountants, Ohio Contractors Association, the Construction Financial Management Association, where he has held several offices, and the Associated General Contractors of America. He has served as an active member of the advisory board to the auditors of State of Ohio, Jem Petro and Mary Taylor, and the Bishop of Diocese of Toledo. Bob has authored and presented various presentations to groups on the following topics: developing key financial ratios and using them to manage your business, understanding and development contract price estimates, internal control and fraud risks, developing an accounting system for a small organization, and the fiduciary responsibility of a board. And today he'll be kind of focusing on the Paycheck Protection Program, to the new proposed Biden administration stimulus, to changes in the employee retention credit. Bob will offer the latest information to help your manufacturing business understand available options for financial relief. And with that intro, I believe I'll have Bob kick us off.
Thank you. Good morning, everyone. And thank you for this opportunity to speak. So real quick, there's a copy of my resume. It was already discussed. So, I'd like to start back a year ago, where we started down this road. And it was end of February, early March. It was announced that we were heading into a potential pandemic related to COVID-19. And Congress acted quickly to provide stimulus and money to help navigate through this pandemic. And so here's a listing of the first 5 laws that were passed, and there's been a total of 7 now. In a little bit of history, March 6th was the first law, and that was called the Coronavirus Preparedness and Response Supplemental Appropriation Act. And that put $8 million primarily into developing a vaccine and for public health funding. Then on March 18th, they passed the Family First Coronavirus Response Act. And this was a cost of $192 billion, and it provided for paid sick leave. And there was a credit that was made available through this law for those individuals that were still working for a company but had to stay home due to the pandemic. And there was a tax credit you were able to use. And then the big bill hit on March 27th, 2020. And this was the CARES Act. And this was $2 trillion. It was the first time there was relief checks to be paid to most Americans, and created this new Paycheck Protection Program. And I remember right in between March 18th and March 27th, Governor DeWine started doing daily announcements and start listening to them. And I remember hearing him first talk about EIDL grants and EIDL loans, economic injury disaster loans, and those being readily available. So we immediately started telling clients about that and companies about that. And then we heard this CARES Act was being created with this new Paycheck Protection Program. And so that law passed on March 27th, and we did our first presentation the following Monday on that law. And then the money went quickly, as everyone remembered. Everyone was trying to participate in the program because it was a forgivable loan program, and it ran out of money. And a lot of companies couldn't make the original timeline. So on April 24th, they passed a new law that put another $484 billion to replenish the PPP program. And again, the whole idea behind the PPP program was to provide liquidity into an economy that was going into shock. The economy was basically shut down. It was forced to shut down by various governors and various authorities throughout the country. And the only way to keep the money flowing in the economy was through this PPP program. So again, you know, the last time we had a major recession, there is a program called TARPs that was used to fund banks. And so what happened in the last Great Recession, banks were getting hit hard with a lot of loans being called and real estate values dropping. And so they try to use the TARPs money, which was trillions of dollars, to push it into banks. And it didn't happen. It didn't happen. It was almost a year before that money started getting to the banks. And by then, the banks didn't want it. And so that slowed down the recovery last time. So this was a very ingenious plan to put this money through the SBA into all these small businesses across the country. And then tell them they have 8 weeks to spend it. I know it drove everyone crazy because they were all thinking about 8 weeks, but that got the money back out. That was the intention of the program. And then on June 5th, they made the change then. And that was the Paycheck Protection Program Flexibility Act. And the big things in there that the SBA had come out with some guidance that they wanted most of this money paid for payroll. It was 75-25% initially. Under this act, it was changed to 60% for payroll and 40% for other costs. And then also expanded up to 24 weeks to spend this money, so you didn't have the 8-week requirement anymore. So again, that was very helpful for most organizations being able to get full forgiveness on their loans. So we had 2 laws that got passed. One at the end of 2020, right at the end. It was on December 27th. It became law, signed by President Trump. And another one that just got passed last Friday. And so this presentation, we want to talk about both those laws, because there's a lot of neat changes that happened in this first law in December, and they're re-extended in the Biden law that was just passed on Friday. So this law was part of an appropriation act that is funding the U.S. government for the next year. So it was nearly 5,600 pages long. It was a monster. And there was $900 billion buried in here for the stimulus for the American economy. And so, you know, it took a lot to find all the information. It was very difficult to read because it referenced back to the CARES Act in a lot of places. But this one had overwhelming support. It passed the House by 327 to 85, and a second vote 359 to 53, and by the Senate 91 to 7. So again, it had overwhelming support by both parties. Okay, most of this presentation has been written on these 2 laws, and again, you know, we'll have updates as they are released. So under this December law, it ended the mandate to provide emergency paid sick leave, which is very helpful. It provided another round of direct payments to Americans. It had a continuation of unemployment. It had a continuation and expansion of the PPP Forgivable Loan Program, and a lot of other provisions that helped provide liquidity to our struggling economy. So the first portion was the elimination of this mandate for emergency paid sick leave. It also extended those credits I spoke about, that if you have individuals that you're paying and they can't come to work related to either they have been diagnosed or were forced to stay home because they were in close proximity or had to take care of a family member, you can get credits for up to 2 weeks of their payroll, and this was extended to 3/31/21. And again, you know, to you know, additional to allow for EPSL, the extended, you know, leaves. So the next thing is direct payments to Americans. There was direct payments to Americans in this law. If for a family of 4, $600 per individual, so a family of 4 could get up to $2,400. That family for individuals had to have the income of less than 75,000 or a joint filer less than 150. It was based upon your 2018 or 2019 tax filings. And, you know, it was phased out at $5 per 100 for anyone over that 150 or 75. This will not be taxable again. It was direct deposited into taxpayers' accounts. Again, the stimulus bill that was just passed on Monday, March 12th, Friday, March 12th, a second check has been provided for, and we'll talk about that later in this presentation. Then the other one that's really controversial, it extends the unemployment assistance. And it also provided for independent contractors to apply for that unemployment assistance. Again, it's up to $300 per week for 11 weeks. So this was initially extended through March 12th under this law. Okay, now under the new Biden law, which is in green there at the bottom, it was extended from March 12th until September 6th now of 2021, this additional $300. Again, so the anything I've added for the Biden law, I've color coded in green, so you can see how this changed. Again, this one, well, a lot of our clients are struggling with this one, and we're even hearing this from restaurant operators now as they reopen. They just can't find employees. And there's a large belief that this extended unemployment is allowing people to stay home and make more than if they went back to work. And so unfortunately, it's causing a lot of concerns in finding employees. We have a lot of manufacturers that could expand their amount of their volume if they can find the employees, but just really struggling to find employees. So then this act in December modified a significant amount of the Paycheck Protection Program. And so when this law was first passed, it said that this income was not taxable. And then the IRS ruled on April 30th of last year that while they agreed that this income is not taxable, they ruled that any expenses funded by PPP forgiven loan would not be deductible. And so by making that determination, it basically created taxable income or loss of tax deductions. And so I know we did a big campaign with a lot of companies and sent out letters to congressmen and everything, and they corrected it in this law. So in this law, you now get to take your tax deduction for any expenses related to money funded by a forgivable loan. It also expanded, if you remember, there was some entities that got these small EIDL grants of $10,000. That's also not taxable. And the last thing is some of our, and in the CARES Act, existing SBA loans. And then the last thing is we heard that, some of our clients, especially manufacturing, use wages to calculate R&D tax credits or WOTC, work opportunity tax credits. And even if you use money that was forgiven under a PPP loan, these wages are still eligible to be used for these various tax credits. So it created basis in these wages. So again, this was very helpful, but I know it's causing a lot of headache at the end of the year in tax planning until this law passed. There was also some neat items. There's a lot of tax provisions in there, really specific, but the ones that we know a lot of our clients are using is starting in 2021. So after December 31st, 2020, business meals are now 100% deductible. Prior to that, they were only 50% deductible. So this makes them 100% deductible for 2021 and 2022. It extended a 179D deduction. This is for energy efficient changes to commercial buildings. We see a lot of this on roofs, heating, air conditioning, those kind of improvements. So extended that. It also extended work opportunity tax credit. Now, we have a lot of clients taking advantage of the work opportunity tax credit. This is where you're hiring someone that's hard to employ. These would be individuals coming off of unemployment. These would be individuals that are receiving food stamps. Unfortunately, some of our clients are now hiring people that have been convicted of a felony. And because they need workforce and they really want to understand what type of felony they were convicted of, and then maybe taking a chance at hiring them. And again, they would qualify for this work opportunity tax credit. Also veterans. if you employ a veteran, qualifies for this work opportunity tax credit. So the other major provisions in the December 2020 law to the Paycheck Protection Program, there were companies that we know of that decided not to take advantage of the program under the first time last year, in April, May, when it was available. And the original program shut down on August 31st, 2020. It has now opened it back up through March 31st for those companies that maybe didn't take advantage of it last year, but now deem they meet the requirements of the program. And we just had one client just go through this. And again, they weren't facing a lot of uncertainty last year, but today they are. And so they qualify based upon today's uncertainty. So they just got their first time draw. Again, for using this first time draw, you follow the same rules you did last year. Again, there's also allowing, we had a couple companies that we know of that returned a portion of the loan, because they felt like they were eligible. Now they can reapply for the original amount. It has expanded eligibility to include additional not-for-profits, such as 501c6 organizations and churches. And the other thing that was included in the original law that's been changed in this revision, if you did receive this $10,000 EDO grant, you were not allowed to get forgiveness of the first $10,000 of expenses. So if you did get this grant, you probably get everything forgiven but $10,000. That has now changed. You now can get full forgiveness and keep the $10,000 as an additional grant. So again, this was a change. If you already went through your loan forgiveness and this was removed, they're going to start a process of returning this $10,000 to those borrowers. So here's the basic understanding of first-time borrowers under the Paycheck Protection Program. There's three basic ways to qualify. The first is less than 500 employees. You can also qualify under the traditional SBA decisions for a small business. So they have a calculator on their website that you put in your NASDAQ code, and they tell you what you qualify under normal SBA rules as a small business. And then there is some methodology that was originally written into law when SBA was first started years and years ago that defined a small business. You can also qualify under that threshold. Under this program, the first time draws, the loans are 2.5% of times monthly average payroll costs and cannot exceed $10 million. The loan has a 2-year term with a 1% interest rate. For loans made after June 5th, which would be any of these loans, you would have a 5-year repayment term. Again, the allowable uses for the original program were payroll costs, which included group health insurance and retirement, interest on mortgage payments, rent, utilities, and other interest on obligations incurred before the covered period. Under this law, they expanded the use of the funds to include some additional items, which we'll talk about shortly. The biggest one is covered operation expenditures, supplier cost, worker protection expenditures, and property damage costs. And we'll talk about all those shortly. This top one is the one that caused a lot of heartburn for a lot of organizations. And this is that good faith certification that as an eligible recipient, you had to be facing uncertainty. And I don't know of a single company that when the economy started to shut down, really had a lot of good, strong feelings that there was no uncertainty. Every one of our clients were facing some level of uncertainty. It was a very traumatic time as the economy was shut down and you didn't know how it was going to impact you, how it was going to impact your customers, how was it going to impact your suppliers, how was it going to impact your employees. And there were so many different ways you could have been impacted. And at first they came out early on when it was found out that there were some publicly traded companies, those primarily in hospitality and food service. So yours are your big national chains of restaurants that qualified as under 500 employees per location. And so therefore they were entitled to draw down a $10 million PPP loan. And that got out into the public. And so that's when the federal government came out and said, hey, wait a minute, it wasn't really designed for publicly traded companies. But if you had an unused line of credit, you still qualify to use this program. It was just that if you have access to public markets, that you weren't entitled. And then they clearly came out later on with guidance that says this determination will only be made on loans over to 2 million. For all loans under 2 million, we have already deemed you met the requirement of the uncertainty. And then lately there was a questionnaire came out in the fall that the SBA intends to use to examine loans over 2 million. And we'll talk about that later on today. Again, there's they waived the guarantee fee. So all SBA loans usually have a guarantee fee. There was none on the PPP loans. Again, they eliminate the requirement that a small business concern is unable to obtain credit elsewhere. So usually to get an SBA guaranteed loan, you can't have access to a line of credit or other sources of lending. They eliminated that for the PPP program. And ultimately, they came out with the law in the summer that said at least 60% of the cost must be payroll. And so you only can use 40% of non-payroll costs for eligible forgivable cost. So again, the 60-40 rule came into being. So again, like I said early on, this law required that you expend the money within 8 weeks. This was changed through guidance by the SBA and became law in that summer law that was passed in June to up to 24 weeks. So again, you can pick any recovery period between the 8 and 24 week period. And then also there's this FTE test that we're going to talk shortly about, that if you had any significant reductions in FTEs during your cover period, that's the amount of time you got the loan until you ended the forgiveness period, which is up to 24 weeks. You have to calculate your number of FTEs and look back at what your FTEs were on two look back. One period was in 19 and one was right before the pandemic, the first 2 months of 2020. And if you do have an FTE reduction during your cover period, some of your costs has to be eliminated proportionately because of that. Now, when they came out with the forgiveness application, the way the application works is you start by putting all your costs on first. So for many of our clients, they might be putting 20 weeks of payroll cost. And if they have an FTE reduction of 10%, they would reduce that 20 weeks of payroll by 10%, or you only get to use 90% of it. And then compare that to your loan, which was really based upon 10 weeks. And so every situation we've seen so far, even with the FTE reduction, they still have enough costs to get full forgiveness, the way the formula works. Okay, so again, it's important that you look at that. If you do qualify where you do not have an FTE reductions, there is an easy form you can use to get forgiveness. And if you do have a reduction, you have to use the regular forgiveness form. So there's two versions of the forgiveness application. And then in the December law, they came out with round 2. These are second draw PPP loans. So these are for companies that had a first round and are still suffering due to the pandemic. And so they're entitled to draw a second round. They allocated $284 billion for these loans, and as of last, I think that's Friday, March 7th, $165 billion was allocated. So there's still another $120 billion available. This law is targeting smaller businesses, so less than 300 employees. And you have another test that you must meet, and that's a 25% reduction in revenue in any quarter in 2020 as compared with the same quarter in 2019. So we have a lot of companies that we work with that have met this definition of less than 300 employees and a 25% reduction in revenue per quarter, one quarter. So again, we're seeing quite a few of these second draw loans. The way they work, it's a second draw based upon your first draw. So you can either use 19 wages or 2020 wages. And so for a lot of our clients, they're using the 19 wages because they were higher. And it makes it simple to process the loan at the bank because it's the same information used for the first draw. This is currently scheduled to close on March 31st, and most banks are stopping accepting applications prior to that. Some of them might even be stopping today, the 15th. So if you're really interested in this, I recommend you call your banker immediately. The unusual thing under the new stimulus law that was just passed on Friday, they added another $7.25 billion as additional funding in this program. Yet it's going to expire on March 31st. Again, I believe they're going to change this expiration date. They did that a couple of times last year. Well, again, I expect that, but right now in their current law, it expires on March 31st. So another requirement of this program is less than 300 employees. So slightly smaller companies, those between 301 and 500 no longer qualify. And again, they still have this per location for people in the restaurant and hospitality business. The maximum loan is $2 million in the second round, unlike the $10 million in the first round. Again, for most companies, it's 2.5% times your average monthly payroll. Again, for those in restaurant hospitality, they're allowing them to get a little bit more. And for them, they can use 3.5 times the payroll. Again, all the same allowable uses, again, as the first program, and including these new items, which we'll now go into. So what are covered operation expenditures? This is pretty much your back office support. So this is payments for business software, cloud computing, product or service delivery, the processing payment or track and payroll expenses, human resources, sale and billing functions, all your basic accounting and back office support. The next area is covered supplier costs. This is a big one for a lot of our clients. And this is an expenditure made by an entity to a supplier of goods. So think about it, if you're in restaurant business, this is your food supplier. If you're an electrical contractor, this is the supplier house that you're buying all your wire from and your other conduits and stuff like that. All this will now qualify. So this is a huge cost that can easily use up that 40% if you don't have enough payroll. The next one is an unusual one, but it was caused by a lot of the problems we're having with the riots in the major cities. And so it's cost related to property damage and vandalism or looting due to public disturbances that occurred during 2020. And these were not already covered by other insurance. And the last one is covered worker protection expenditures. So this is everything you had to do to update your organization due to the COVID-19. Okay, so this a lot with social distancing and customer or employee safety. Okay, so a lot of them are, going a lot of restaurants. They're changing their drive-through windows. They're putting up these barriers between people at the tables, items like that. We're even seeing this in some commercial buildings where you have a lot of employees maybe sitting too close to each other, so you're forced to build these portable walls between them. Change in your air or ventilation system or filtration systems. Any of these that you had to incur now qualifies also as an allowable cost. So here's the latest information on what's going on with this program through March 7th of 2021. Okay, so the first round, these are the ones from last year. There's about 687 billion and about 7.5 loans last year. And in 2021, it's up to, there's 2.4 loans for a total of about 165 billion that have been issued so far. Again, so this breaks it down by first draw loans and second draw loans. And as you can see, a majority of it is the second draw loans. There are a small amount of first draw loans that are coming through now, about 17.4 billion. And the rest is all the second draw loans of $147.5 billion. And this is by state. I think Ohio's 9th on this list, and we're in the middle column all the way towards the bottom. And in the first round, we were traditionally 7th or 8th. So in 2021, we're about the 9th largest of states and authorities. So on here, you'll see it's like, I think Puerto Rico's on here, another members of the you know, their, I'm lacking what we call them. A loan size, so as you can see here, a majority of the loans are under the 2 million, and the only ones that would be above would be the first draw loans. What's amazing is there's almost 74% are 50,000 or less. And then another 11% are up to 100,000. So as you can see, there's almost 85% are less than 100,000. And the average loan sign is 68,000. And this is by industry now. So the leading industry is what we'd expect, the accommodation and food service. They're leading with 29 billion. Then construction is about 22 billion. Professional, scientific, and technical is about 18.3. And then healthcare and social assistance is 17.3. And then manufacturing, which is another large one, is almost 16 billion. So again, there's about, probably about 60% in those top 4 areas of all the loans. So now we can talk about forgiveness for a little bit. So prior to the December law, SBA had released guidance for simplified forgiveness application for loans at 50,000 or less. Under the law that was passed in December, this was now raised to 150,000 or less. And it's a simple form. It's number 3508S. It's a 1-page loan forgiveness document. Very simple, straightforward. It's pretty much giving anyone with a loan up to 150. It's probably, if you fill out this form, you're going to get automatic forgiveness. Again, all you have to disclose the amount of loan and your payroll costs. You must retain all relevant supporting records for 4 years because the SBA has the authority to come back and audit this information. Again, they can only audit the information on your application. There's also a simplified application for small loans that came out about 3 or 4 weeks ago. And there was a 2-week period where the SBA stopped reviewing any loans of with greater than 20 employees and allowed these smaller organizations. And that's a set aside that we're talking about right here. It's actually up to 20 employees they allowed to apply under a 2-week period. That period is over, but there was a period everything was shut down. So what we're seeing with this is that the underwriting of these loans have been more rigorous than the first time around. They're starting to ask more questions. They're actually doing background reviews. And so under the first time they did that, they just simply got the money out. And so these second round loans are taking a little bit longer, but they are getting approved. But I know that a lot of forgiveness applications have been set aside while they finish applying, approving and reviewing these new round 2 loans because they really want to get that money out first. So the big question on loans over 2 million was, how is the SBA going to audit these loans? As a reference, when they had their press release back in the spring of last year, when the announcement came about these publicly traded companies using the money. And so in October of this year, they came out with a loan questionnaire for loans over 2 million. And the way it works is that you fill out your forgiveness application, and then the SBA is going to could request this questionnaire, and it's my understanding they're going to for all loans over 2 million. And that's approximately 31,000 loans right now that are over the 2 million mark. And so they're going to require this questionnaire. And I don't know if anyone's looked at this questionnaire, but it goes into a lot more than the true requirements of the program. So they're asking about employees making more than a certain dollar amount, and you have to disclose how many. They're asking if you had any expansion programs. Did you pay off any debt? Distributions owners other than what's required for a pass-through entity for taxes, cash balances, sales changes, a lot of intruding questions that were not part of the program. You know, and again, so they came out with that number, question and answer, and that's how some of the guidance have been coming out with these question and answers, which is question number 53 there. And in there, they say that, you know, this is one document that they're going to look in determining loans over 2 million, and really this uncertainty question. And right now, the Association of General Contractors has sued the SBA and declaring that this document is too intrusive and is asking for much more than what the law required, and challenging whether or not they can even use this questionnaire. And about 2 weeks ago, I listened into, maybe about a week ago, I listened in a presentation from the Association of General Contractors, or DC. And the SBA had, I think, up to the end of this week to respond to that lawsuit. So we might be hearing soon in which way this ends up going. But in their response to this Q&A, they said it was only one document, you know, one item that they'd be using and determining whether or not you qualify for this uncertainty. But the way this document looks like, it feels like it's electronic, which would make sense. You would want to have electronic scoring where every, you know, it's a PDF that they can then download into a database. And then you look at answers that stick out or what you say within that questionnaire. So I'm telling every company I work with and assisted with this, and I've looked at probably about 60 or 70 questionnaires already, that first of all, make sure what you really want to be heard is included in that questionnaire. Because that might be all they look at. And if they get comfortable what's in that questionnaire, they'll move on and give you forgiveness. And you can submit additional data, but it depends on how much it is, how many documents you submit. There's a likelihood they're not going to look at it until, you know, they deem that maybe you don't qualify, and they're probably going to come out and talk to you anyways. And you'll have an opportunity to plead your case. Again, we have not seen a single loan yet over 2 million get forgiveness. And so talking to a lot of bankers that we work with throughout the region, we've not heard of any. I think I finally heard of one the other day. One banker had a loan over 2 million forgiven. So again, these are slowly moving through. There's 31,000. It's going to take a long time to get through all these questionnaires. Under the original law, the SBA had up to 90 days once you submit a forgiveness application to respond. In many cases, they're beyond that 90-day window. So again, we're looking at it more as a recommendation that they feel like they have up to, they could have 90 days or more, because they really are not following the 90-day requirement. Again, I don't think many companies want to challenge that. They're waiting to hear to see what happens. So here's the status of loan forgiveness from the SBA website. There's a link there if you want to go watch this. So, you know, the 2020 loan volume was 521 billion. Of that, almost 179 billion has been forgiven, or 34%. 1% have not been forgiven, and 16% are under review. And there's still 49% that have not even submitted their application. That's amazing. I thought that was a very high number. But again, I know a lot of the larger banks, when they came out with this new $150,000 application for loans under $150,000, shut down their portal to build out for this new application. So no matter who you were, you weren't able to use their portal to supply, you know, to apply for forgiveness. But hopefully they'll be opening these up soon and getting this forgiveness started again. This is another program. So like I mentioned early on, in the CARES Act, for those companies that had SBA guaranteed debt, the SBA made 6 monthly payments on that debt in 2020. They extended this program now through September 30th of 2021. And I just heard of a client the other day that got these additional 3 months of SBA payments in 2021. So they got 6 last year, and they just got 3 additional ones. Now these are tied to what they call hard hit industries, and you get up to an additional 5 months. And he was just notified that his loan got additional 3 months paid in 2021. So this is starting to happen right now. And so if you have an SBA loan, I would contact your loan officer and see if you qualify for these additional payments. And so this is the big one here that's also having a lot of companies look at, the employee retention credit. Again, this was provided for under the original CARES Act, but was modified under the law passed on December 27th, 2020, end of last year. So under the original CARES Act, you had to choose, use a PPP loan or an employee retention credit. You could not do both. This law now allows you to go backwards and use both. So again, so you can now go back and claim these credits. They're smaller in 2020, but they're much bigger in 2021. Okay, so for 2020, you must follow the requirements of the CARES Act. And there are new requirements for 2021 in this stimulus law. When this law was passed in December of 2020, they gave 2 more quarters in 2021 to be eligible through June 30th. So you can use 2 quarters. And now in this law that was just passed on Friday, they extended this program all the way through December 31st. So you could claim this credit for up to 4 additional quarters in 2021. Now there are different rules for 2020 and 2021. So I'm gonna walk through each one. But the credit is allowed against your employer FICA taxes, and you claim for it on your 941, which is a payroll tax return. You can now amend those 2020 941s to claim these credits that you're now eligible to claim. And you have up to 3 years to do that because there's a statute of limitations that you must amend these returns within 3 years from the date they're filed. So there's no rush, but you gotta look at this. Wages can be used for eligible PPP forgiveness expense or the ERC, so there's no double dipping. But for most companies, if you do qualify in 2020, you should be able to get enough costs to get both full forgiveness and these ERC credits. Okay, what happened was that you might have used some additional wages on your forgiveness application that's already been forgiven, but you only have to claim those wages that were actually the amount of your PPP loan. So if there's additional wages included on your forgiveness application, but they were not used, they were just extra, you can now use those extra wages to claim this ERC credit. Plus you got the wages before and after you got your PPP loan. That would be the cover period that are eligible for this. So again, the order is you have to use up the ERC first, then the PPP loan, and then you can finish up the year with additional ERC. Okay, now the reason why most companies didn't use the ERC and it wasn't the PPP gave them larger amounts in 2020. And they had no requirements. So this PPP did have a requirement that you must meet. I mean, not the PPP, the ERC, the Employee Retention Credit did have a requirement you must meet. And so for many companies, they weren't eligible for it. So that's why they did the PPP. So here's the 2020 rules. Eligible employers closed or partially closed due to the pandemic. It had to be by a government order, but it could have been a government order to one of your customers. So if you're a contractor and you had a job going on in a school, and that school said you can no longer come to our school to work on the job, that does qualify you for it. Or there's a 50% reduction in revenue in any one quarter of 2020 as compared to the same quarter in 2019. So again, that's the tough test to meet for a lot of companies. If you have the 50% reduction in any one quarter, we just looked at one this morning where they had that. So you might be eligible. Again, this credit is going to be a maximum of $5,000 per employee for the year. Okay, so it's 50% of qualified wages up to $10,000. So again, it's not as big as the PPP in most cases because it's only $5,000 in payroll. Okay, and then they have this rule for less than 100 employees or greater than 100 employees. If you have less than 100 employees, you automatically get this credit. There's no additional requirements. If you're over 100 employees, you're only going to get this credit for those employees that you paid to stay home. So if you're over 100 employees, you probably don't have a lot of qualifying wages. Now, the other thing to point out, and this especially being March 15th, when a lot of tax returns are being filed today, if you plan to go back and amend and get these credits, and they are funded up to $5,000 per employee, those wages are not deductible then. So this is a taxable credit. It's going to create taxable income if you get it. So you would have to eliminate or take those wages off your corporate tax return or business tax return. So again, if you're thinking about going back and you haven't filed your tax return yet, I would definitely extend the tax return, because we're looking at a lot of clients that are going to be eligible for this. And let's say you have 30 employees and it's 5,000, that's 150,000 that you could be eligible for. So it's worth looking at. But again, you're going to have to, those 150,000 on wages, if it's funded, will not be tax deductible. Now the rules get a little easier in 2021. Again, the same requirements, partially closed or closed. And now it's only a 20% reduction in revenue. And when this law was first passed, it was only for the first 2 quarters. It's now for all 4 quarters of 2021, as compared to the same quarter in 2019. And what's neat about this, you can claim this credit each quarter up to a total of $10,000 per quarter. Again, under the current law is 20, now it'll be 40, but it's 70% of the qualifying wages. So you could get a credit up to $7,000 per employee per quarter for a grand total of $28,000. And the other favorable item that was in this December law that was passed, it eliminated that 100 employee rule. So now you only have to be under 500 employees and you automatically get this credit. So again, this could be a huge credit in 2021. And again, you should start measuring it right now in your first quarter of 2021. So you don't have to amend any tax returns. And so it's a huge opportunity, huge opportunity. So here's an example of last year. We have 2 employees, and one has qualifying wages at $8,400, 50% of that, they're $4,200. And the other employee has qualifying wages for last year of $10,800. They're going to get capped at 10, so 50%. So they only get $5,000 for the employee. So in this case, this employer got two credits of $9,200. So you get to include health insurance and wages. So again, health insurance is also allowable for this credit. And so this is how, now this is per quarter for 2021. Again, you got 2 employees, one made 7, one made 15. You got health insurance. So now they're up to $8,950 and $16,950. The one that's under 10,000, they're going to get the full $8,950 or $6,265, 70% of that. And the one over 10,000, they're capped at 10,000. So they get 70% 10,000, but this is per quarter. So again, a huge, huge benefit for 2021. You know, in the December bill, you know, there was a lot of money, additional money available to the economy. So $82 billion was included for funding colleges and schools. And it was kind of directed to HVAC repair and replacement to mitigate virus transmission. So again, those in the construction industry, good opportunity here. $10 billion in child care assistance, $7 billion for broadband expansion, $69 billion for vaccines, testing, and health provider, another $13 billion for the SNAP program, and $22 billion for health-related expenses incurred by state and local governments. So this is any type of health-related expenses that state and local governments incurred. You know, the other area that we have a lot of clients in is in the real estate area, and a lot of them have housing. And unfortunately, under the CARES Act, there was a moratorium on evictions. And so what's happening, unfortunately, tenants could stay in a home, and it was hard to evict them. Again, that was extended under the December bill until January 31st. But under that bill, they provided $25 billion in emergency rental aid to help these tenants make their rent payments. Again, our small landlords were the hardest hit. where, unfortunately, if someone stopped paying, the news got around the building. And so they ran into a lot of difficulty with their tenants. And then the recent stimulus law that was passed on Friday, they added another $48 billion for emergency rental assistance. Again, this is helping people not get evicted. So what else is in this law? So this law is called the American Rescue Plan Act. Again, it was signed by President Biden on March 12th, 2021, this last Friday. Again, it adds an additional $1 trillion of stimulus to the U.S. economy. I mean, the primary emphasis of the law is to provide support to individuals. There's a small amount for some provisions to assist hard-hit businesses. But again, most of this law is for the individual taxpayer. So here's what impacts the businesses first. Extends that employee retention credit to the end of the year. It puts in a $1.2 billion for shuttered venue operating grants. So we see this in every community where you might have a movie theater or historic movie theater or performing arts center. They got hit hard, they had to shut down. So they can use this grant program to support their operations. Again, it put another $7.5 million more into the, that should be billion, I think, not million, billion more into the PPP program. Then it has a restaurant revitalization fund, because again, restaurants and bars were hard hit by them, 25 billion more relief. And when that the law came out for shuttered venue operating grants, that originally came out in the December law, but you had to choose between PPP and using this program. Now under this existing law that just got passed on Friday, you can use both programs. So you can get one of those grants, plus you can get a PPP loan. And then it also injected another $15 billion into the EDO grants, these $10,000 of advanced grants. Those were quickly used up last year and never refunded. Now they put another $10 billion back into this program. Now, the impact individuals, again, there's this $1,400 stimulus check that they're talking about. I believe they start transferring money over the weekend for those that make $75,000 per individual or $150 or less for a joint tax return. They extend the unemployment for 300 weeks, federal unemployment through September 6th. Also made the first $10,200 unemployment benefits for 2020 is not taxable for those that make less than $150,000. And it did extend this tax credit for paid sick and family leave extension to September. And there's some additional funding, $350 billion for state and local governments. My understanding these are going to be block grants. And so those state and local governments can use them however they feel fit. $170 billion in funding for K-12 and college universities. And another $165 billion in COVID-19 funding for vaccine testing, contact tracing, and other health-related matters. Now, I know I went through that rather quickly, and it's almost an hour. Thank you for patiently listening. And are there any questions right now?
Thank you, Bob. That's a really great rundown of kind of where we're at and some of the, in case someone hasn't taken advantage of some of those opportunities, hopefully that gave them some information. I did have one quick question. You mentioned that in terms of the retention of relevant records for the PPP going into 4 years, is there any special documentation or anything interesting that folks maybe won't be thinking about retaining related to that you would recommend that they retain as part of that?
I mean, clearly they should retain anything that was for expenses claimed on that PPP forgiveness application. And they should retain records on their FTE calculations, even if they qualify for the easy, to demonstrate that they met the requirements of that. And so again, I didn't go into this presentation, but there's a lot of ways to not count an FTE reduction. Purely an FTE reduction is someone you laid off and you did not rehire. But you had up to the end of last year to rehire people and not count them as an FTE reduction. You also were allowed to, or not had to count FTE reductions for those that were fired for cause, that quit on their own, or for those that you may be laid off and offer a job back and they decide not to accept it. So none of those count as an FTE reduction. But again, you got to keep records of all that. So it's very important to keep records of that, especially if you offered them a job. You have to keep documentation of that letter where you offered them the job.
I have heard that some of the employers say that they've offered positions back, and then those people, those folks, for whatever reason, did not take them up on returning to work, and that's a good point on that as well. Anyone else have any questions? I don't see anything in the chat. Just a nice job. Someone mentioned timely subject, which I completely agree with.
I've got a quick question.
Yes, Susan.
How about that, Bob? Bob's own coworker is firing a question at him. So I handle marketing for Gilmore Jason Mahler. But I just thought I'd ask, sort of, because that was so much information. It's hard to digest sometimes, but like, if you had some key takeaways, if you think about some of the questions you've gotten from clients in the last few days about what they're concerned about, or if you had key takeaways for folks on the call, if they need to call their CPA and talk to them about something, what would that be?
Well, yeah, I think number one is making sure if you qualify for PPP Round 2, you have probably until this week to do the application. So if you have any interest in that, I would contact your banker immediately and find out what their plans are for accepting those applications. Then the second thing is employee retention credit. We're finding out that looking at every one of our clients here, and a majority of them are going to get some benefit out of that. So that's a huge new opportunity. And so again, if you haven't filed your 2020 tax returns, I would definitely extend them until you have a chance to look at this, because it's a great opportunity for some additional funding for 2020. And then the rules are so much, eases eligibility in 2021 that even if you didn't qualify for 2020, you probably will qualify for something in 2021.
And Bob, one real quick follow-up. For those who have filed their returns, I would imagine most companies have not, but individuals, when do you need to amend or refile? Like, for instance, with this, this unemployment issue, the non-taxable 10 grand.
I mean, you get up to 3 years from the date you file to amend returns. So again, it's the date you filed, not the date it was due, the date you actually filed the return. So if you filed early, you got 3 years from that.
Okay.
At that point in time. 941. So, for most companies, if you're looking at the first quarter of 2020 to amend those 941s for the ERC, those were probably filed in April of 2020. So you have 3 years from there. Another thing I didn't cover, and I know, again, it's EIDL loans. There's these EIDL loans out there. Those are still available. The SBA just ruled on Friday that you now don't have to make payments for the first 2 years. It was originally only 1 year. Now it's 2 years. You don't have to make payments. The interest does accrue during that period, but the first required principal and interest payments not for up to 2 years after you received the loan. So, and then there's some companies that took advantage of the FICA deferral for their employer portion. And again, that would now have to be starting to repay at the end of 2021 and at the end of 2022. You get 2 years to repay that. So there was a lot of relief provided to businesses throughout the year. The other big one I know a lot of companies all got in Ohio was the Bureau of Workers' Comp rebate, and basically pay no Bureau of Workers' Comp premiums in 2020. So again, be interesting to see what the rates look like going forward. But big refunds were seen by a lot of companies.
That's some great questions, Susan, and thank you. That's a good recap, Bob. And Susan, thank you very much for your help putting this together. And I'm really glad we were able to partner together to provide this information to our members. I'm going to be sharing obviously the slides and this presentation with those that are watching the recording and their contact information if there's any additional questions that come from this. But thank you again to Bob and Susan for your help putting this together and great information. And we will see everyone next month for our next Manufacturers Council meeting.
You're welcome. Take care, everyone.
Thank you, Matt.
Thank you very much.